One of the things I want to share with you is one of the strategies that I'm using to trade equity options. Equity options gives us a opportunity to take small risks when we believe a move is about to happen. You can use a system. If you're trading a trading system based on an equity, you can end up taking the trade in the option instead of the actual stock. So it requires less capital and less risk. Today I took these Apple trades on the 110 puts, and you take a look at Apple and put it on the daily chart, and with the Shanghai selling off to the 3500 level and general weakness in Apple and general weakness in the market, coming into Friday, I believe this was a good trade, and I believe that Apple would trade down to at least 108. And so you see the chart. Here's the daily chart, and it did. It's made a low today of 107.75. And so today I put on these three trades, and I bought four 110 puts at 32 cents, and I ended up selling them at 31 cents. Now keep in mind this is a discretionary day trade, and I'm watching this market. I'm keeping the risk low. And let me put the Apple on the 1 minute chart, and we'll put the pointer tracking on. So you can go back and take a look. Apple started trading here today. There was a gap down, and it rallied, filled its gap, and that's when I started getting in on this trade. I'm going to put pointer tracking on so you can see where these trades take place. And so instead of shorting Apple right there, you can go long the put right there. And so I went long the put, and then Apple looked like it might rally, and looking at the indexes, they might rally some more. And so I got out, kind of a scratch trade, bought it at 32 cents, sold it at 31 cents. And by the way, 32 cents is $32 risk. If you buy four of them, your max risk on that trade is 108. And so you've got 108 risk there. Then you get back in. I got back in, decided to short it again, 38 cents. Got out at 25 cents, lost 13 cents on that trade, 14 cents total on the day on four contracts. It was just down $56 total. Then I got back in here and bought it at 28 cents. So at this point it looked like it was going to roll over again, and it did, and it went down and it hit that nearly that 108 level. You see that spike there. You see this parabolic move in the options, and that's what I'm looking for. Is I'm looking for opportunities to kind of corner the market as far as time. There's not a lot of time left on this. There's only this expires today, and so there's many situations where you want to, when you trade options, where you want to have more time in your option. You don't want time decay to be a factor. But if you're day trading a quick move and you want to trade near the money options and you anticipate a big move for that day, you can get lower priced options really close to expiration, really reduce your risk. And so that's what I did here. Bought four at 28 cents, sold them on this spike up. Could have gotten much more out of it, but that was a fast move. The high on that was 208. Got out at 140, and then it's continued to move down, and it made even higher highs. The high is 241, and so this is the trade that happened. Total profit on this is 392. It's not bad for the low risks that you're taking on this trade. 28 cents. That's $28 times 4. That's risking $132. Actually, no, it's $112. So risk $112 on this last trade, and got out there. So that's one way you can short this market if you anticipate it. A lot of times the indexes are very choppy, and if you have a small account, you're thinking you don't want to put in a trade because you can easily get a 10-point rally in the S&Ps as soon as you get in, and that's a $500 stop loss on this. You know, you're talking around $100, $150 risk to take these trades and then capture these moves. And so the risk reward is pretty good. If Apple were to just violently reverse and my options get slammed and pegged to zero, I'm only down $112 on this last trade. And so Option Station Pro gives us a way to look at a lot of option strategies, option prices at once, and that's what I like in TradeStation about the Option Station Pro. You can pull this up. You can type in the symbol right here. I'm sorry, Apple. Biogen is another one I've been looking at. Apple. And you can take a look at that. You see today you see the option expirations, and then Apple has weekly option expirations, so you have lots of options you can trade each week, and the further out you go, the more expensive they are. But today, these options expire today, and the price of Apple is right around 108.40. So if you're going to trade Apple and you're going to buy a put, you could, for 60 cents, or the minimum contract size is like a futures contract. It's 100 shares, and so you don't really pay 60 cents. You pay 60 cents per contract, but on 100 shares. And so this option trade would cost $60. And so if you were to click on that, you could right click on it, or you can left click on it, and down here you can come up and you can trade it. And so once you hit the trade button, it'll give you the option to buy or sell that call option. See, the bid is 56 and the offer is 60 cents. And so what would have to happen to Apple would be that it would have to trade below 107.40 for this to be profitable. And so at 107.40, 108 is the strike price, but since you pay 60 cents for it, you have to reduce that. And so this market could continue to sell off today. It could continue to go down as low as 105 or lower. We could get some really strong selling going into a weekly close. You never know. And so that's a low risk trade that could be taken in this example. Or if you wanted to say, it's oversold, it's going to bounce, you could buy the 108 calls by hitting here, left click, and then you can trade the 108 long call. And so you can do other strategies such as straddle, strangle, verticals, butterflies, iron butterflies, condor, iron condors. And so there's lots of different options to trade options in TradeStation, and I really like Option Station Pro, and I'll be sharing more and more information about this. I've said this before, and I'm going to continue to share the option trades. Right now it's research, discretionary. For those that like to discretionary trade, this is one way to do it. You don't have to have a margin account to do this. Pull up TradeStation here. So if you go to tradestation.com and you click on products and you click on options, you can learn more about options trading, account and margin requirements. You can see all of this right here. If you just want to buy and sell calls and puts, you can do that. The minimum account size is only $5,000, and you've seen the day trade rules. So if you go to stocks and ETFs and account and margin requirements, non-day trading accounts are $5,000. Pattern day trading accounts are $30,000. You can open up a non-margin account and you can day trade it. You can put on more day. You can day trade options, as many trades as you want, and you don't have to have this $30,000 to day trade options. You only need that if you're using a margin account, and if you take more than 4-day trades in a 5-day period, then you need at least $30,000. But if you're just trading a non-margin account, meaning you're not using any leverage, then you can day trade options and put on more than 4 trades in a 5-day period. So that's some information on how to open up an account and what the requirements are. And again, you can take on low risk trades. When I say low risk, it's the price is low. The one thing you can do to make this risky, even though options are cheap, you could be very risky if you overtrade. So if you just put on a bunch of trades and you get emotional and you're the type that tends to overtrade, you put on a lot of trades, you could blow through a $5,000 account in a week. And so in that perspective, it can be risky, but you have to limit yourself. You have to tell yourself how many trades per day and how much per day you're going to risk, and don't overdo it, or this low priced option strategy that looks low risky will become very risky and you'll lose a lot of money. These type of trades are wrong more than they are right, and so the win risk reward ratio is huge if you are right, if you can get these big payoffs 6-to-1 or 10-to-1. And so you can be right only 10 to 40% of the time when you have risk to rewards like this. But if you don't get those winning trades, then you can have 100% losers. You can buy a bunch of cheap options that all expire worthless. And so it's important to have a strategy. It's important to still have discipline. There is no sure thing. And so this is just one way that you can do it. But always always be careful with your risk and how many trades you take and how much you risk.